Assalamu alaikum. Welcome to my presentation. First of all, introduce myself. My name is Kushal Gain. My student ID 2310637145. Today I am talking about my topic. My topic is provide a summary of the monetary policy, and second, mention the significant changes compared to the last policy. Third, what are the tools used by Bangladesh Bank? Fourth, suggest the policy reform needed from my understanding. Let's dive into the key point. Part 1. Provide a summary of the monetary policy. Monetary policy. Monetary policy refers to the strategic action taken by a central bank to control the money supply, interest rate, and availability of credit in an economy. Objective of monetary policy: controlling inflation. One of the primary goal of monetary policy is to keep inflation at a moderate and stable level, ensuring price stability. Price stability prevent unpredictable changes in the cost of goods and services, promoting economic growth. Monetary policy play a vital role in fostering economic development and ensuring adequate credit flow to productive sectors such as agriculture, industry, etc., reducing unemployment. Monetary policy help to reduce unemployment and encourages business to invest and expanding. Then, types of monetary policy. There are two type of monetary policy: expansionary monetary policy and contractionary monetary policy. Expansionary monetary policy increases the money supply and reduces the interest rate. Contractionary monetary policy reduces the money supply and increases the interest rate to control high inflation. Then advantage and limitation monetary policy. First, advantage of monetary policy. Monetary policy has several advantages. It can be implemented quickly, and it is flexible enough to adjust frequently. Now, limitation. Monetary policy has time lags, so it affects affairs slowly. Depreciation, lower interest rate may not boost borrowing liquidity drop. External shocks reduces its effectiveness. Now, part 2, mention the significant changes compared to the last policy introduction. Bangladesh Bank releases its monetary policy statement twice a year to guide inflation, credit flow, and overall financial stability. The latest policy continues a tight monetary but introduce several structural changes to improve effectiveness and transparency. Now, major changes compared to the previous policy. First, policy rate decision. The central bank has kept the policy rate 10%, whereas earlier policies frequently increased the rate to fight inflation. Revised inflation target. The inflation target has been adjusted 7 to 8%, slightly higher than the previous target. Third, lower private sector credit growth. The target for private sector credit growth has been reduced as 9.8% to 7.2%. The 7.2% shift to an interest rate targeting framework. One of the major structural changes is the move from a monetary targeting system to an interest rate based on framework. Then removal of the 9% lending rate cap. The previous fixed cap on loan interest rate has been removed. Changes in the interest rate corridor. The standing deposit facility rate has been reduced and standing lending facilities rate remain high. Now, implication of the new policy: inflation management. Tight credit condition and stable policy rate may help reduce inflation gradually. Second, bank flexibility. Market-based lending rate allow bank to adjust interest rate according to real market condition. Third, impact on businesses. Borrowing may become more expensive, leading to slower expansion and reduces investment in some sectors. Financial stability. The shift to interest rate targeting and improved liquidity control strengthen long-term financial stability. Then, part 3. What are the tools used by Bangladesh Bank? First, introduction. Monetary policy is the one of the most essential instrument for maintaining macroeconomic stability in Bangladesh. Bangladesh Bank, as the central bank of the country, applies several tools to regulate money supply and control inflation. Tools of monetary policy. Repo rate. This is the rate at which the commercial bank borrow short-term fund from the central bank. Reverse repo rate. The rate which the commercial banks lend money to the central bank. Cash reserve ratio or CRR. CRR is the percentage of bank deposits that must be kept with the central bank in cash form. Statutory liquidity ratio SLR. SLR is the percentage of deposit that the bank must maintain in the form of gold, cash, or approved securities. Open market operation OMO, the buying and selling of government securities in the open market. And now, but or suggest the policy reform needed. From my understanding, banking sector reform has emerged as a critical national priority under the current interim government of Bangladesh. The establishment of multiple task forces, especially the banking sector reform task forces, marks a decisive move toward the restoring uh, stability, accountability, and transparency in the financial system. Strengthening asset quality and supervision. First, mandatory independent AQR every 2 years. The prevent the accumulation of hidden non-performing loan (NPL). Bangladesh Bank should require all banks to undergo an independent AQR at regular interval. Second, strengthen early a warning system (EWS). The central bank should adopt a more advanced risk-based supervision model that uses real-time data analytics, artificial intelligence, and automated alert to detect emerging risk in loan portfolios before they uh, scale escalate. Introduce penalties for misreporting asset quality. Bank or official involved in misclassifying loan must be subjected to strict regulatory penalties, including financial sanction. Reforming the bank resolution framework, create a bridge mechanism. A specialized temporary bank should be established to take over assets and liabilities of troubled bank. Introduce a bail-in tools instead of uh, instead of relying solely on taxpayer-funded bailouts of BRO, should include bail-in mechanism where shareholder and certain creditor absorb losses before public money used. Establish a national deposit insurance strengthening strategy to maintain public trust. The deposit insurance limit should be reviewed and increased based on inflation and risk assessment. Reforming the legal framework. Higher penalties for financial crimes. Punishment should be stricter for large-scale money laundering, including higher jail terms and heavier fine to deter potential offenders. Protection for whistleblowers. A comprehensive whistleblowers uh, protection law is essential to encourage reporting of internal corruption and financial malpractice without fear of retaliation. Clear guideline for inter-agency collaboration. All agencies, ACC, NVR, CID, SG Office, and Ministry of Law must follow the standard coordination procedures to avoid bureaucratic delay and overlapping responsibilities. Now, strengthening banking governance and accountability. Fit and proper criteria for bank directors. Directors should undergo competency evaluation, background check, and conflict of interest assessment before being appointed. Limit related party lending. Strict enforcement is needed to prevent bank owner from approving loan to their own businesses or associates. Now, expanding the financial transparency and public reporting. Publish annual banking sector stability reports. Like other developed countries, Bangladesh Bank should publish detailed public report on bank health, NPL, capital adequacy, and progress on reforms. Create a public dashboard on bank performance. A digital dashboard would allow citizens to view basic indicators and about bank safety and performance, enhancing the transparency and trust. Let's That's all about my topic. Thank you.